Hey everybody, getting ready to trade June week 4 2020 and polishing off the first half of the year for 2020 and Q2. For portfolio managers who trade in stocks and ETFs, anything they trade, buy or sell next week will settle in Q2, June, and the first half of the year. There are still 2 trading days left to June after we get back from next weekend, but those 2 trading days will settle in July. They will settle in July, Q3, and the second half of the year. So if we have not seen our high yet for the month and the quarter, next week's going to be the week to put that in. Not the following week as we head into the 4th of July, because those trades aren't even going to count for the first half of the year. And psychologically, why bother? Wouldn't you want to be in a mode where you're selling everything off as we get into the second half of the year so that you can buy new and then run up from there? But what if not everybody got out in front of the Fed on June 8th of 2 weeks ago? Well, here's the thing. When we look at a weekly chart and we mark the 3028 level on it, we look left and we see this is where we topped out in July of 2019 and sold off and then failed again in September and then finally made it through in November of 2019 and began our leg up to our all-time high. So this is a big breakout level, and it's come back to haunt us once again over the course of the last 4 weeks of trading. To whittle this down even further, in the previous 3 weeks of the one we just traded, we either opened or closed between in a 6-point range between 30.38 and 30.44. So my thinking is this: if we come in on Monday flat to higher, we're definitely going up to 3,300, if not 3,325. If we come in at least above 30.28, and better still, above this 30.38 to 30.44 level and hold that, we will reverse and at minimum try and test this high. And then if we can take out this high, we go on to 3,300 to 3,325 and look into this gap. We're not going to fill this gap until after we get into the next set of earnings. And only if those next set of earnings look good and the next non-farm payrolls follows through on what we saw in the last one at the beginning of June, only then are we going to fill this gap and move on, because this gap represents the last stand before we make a new all-time high. So it's going to take much more of a catalyst than just painting the tape for the end of the quarter to get through this gap and get onto an all-time high. But at any rate, as long as we open flat to above this 30.28 level, better still 30.38 to 30.44, we are going to move up to at least testing this high or going into this gap and testing the low 3,300s, anywhere from 3,300 to 3,325. If we open down and break down through 30.28, that confirms that profits have already been, profit taking has already been started. And we are traveling on down here to 28.63 as our first target, and then 27.92 to 27.93 as our next and final target. We might take a look below 27.93, but we are not going to have a weekly close below this 27.92 to 93 level. This is the halfway back point for our year so far, from the all-time high in February to the March low. Symbolically, this is where we're going to want to hold things in place and then pick it on up and get on up to a new all-time high as this third quarter goes on. The reason why the 28.63 level is of significance is that we have a big gap that was left here going into Memorial Day weekend, so that kind of aligns and jives well with us going into the 4th of July weekend. We have a big level here where Jeff Gundlach came on CNBC back in April and stated he had shorted the S&P 500 that morning at that level, and sure enough, ever since then we have gamed it back and forth, and you can see how much that was gamed, ending with this gap that we left here at the close going into the Friday, into the Memorial weekend holiday. So, like I said, if once that breaks, if you think we're going to hold above this, I don't know. I don't really think that this level is significant enough to hold us up. I really think that we're probably going down to this 27.93 level instead. That's where we're going to find our low before reversing and moving up. And the timing on this would be coming in on Monday flat to higher, or at least holding above this 30.28, and working our way up by Wednesday to Thursday up here, and then rolling over on Thursday to Friday and selling off, because that's where the profit taking is going to begin. You're going to want to take their profits on Thursday and Friday, because that's where stuff is going to settle at its best and at its best price for their portfolios to end Q2. And then as we get into the week after this next one, we are selling off as we head into the 4th of July holiday, and we are looking to target 27.93 on that sell-off. Hope this video helps you out and gives you a good start to your week. As always, good luck and